Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at oil starting on the hourly time frame. So we had the contract rollover, which I never like because it's an artificial change in the price on the chart where we just had a gap up. And oftentimes you'll see that gap fill after the contract rollover, but the exact opposite here on oil with some really nice follow-through for the bulls. And it looks like normal healthy consolidation going on now on decreasing bearish volume and looking like a bull flag pattern. And again, if you're not familiar with a bull flag pattern, it's when you have a nice strong move to the upside and then you form a parallel support and resistance line on consolidation. Nice and contained, normal and healthy, no big spikes in bear volume. And then that leads to continuation to the upside once that consolidation is through. So we're right now back testing support. 53.11 was resistance, and now it's back as support. So we're right on that level. And if the bulls show up, resistance is at 53.64. And we did break this double top. Remember, we had those tops at 53.47 and 53.49. So we did get over those levels, but we could not close over those levels just yet. So I'm going to stick that resistance line still right there. And you can see, look where that candlestick closed, right at 53.47, unable to get over that resistance. So that is still a valid resistance to be watching. If the bulls can turn that into support, we're looking back up at the next target for the bulls to get over 54.29. So a nice end of the week. And looking at the daily time frame, we can see a big strong candlestick, keeping in mind the gap up with the contract rollover. But we broke the lower high, lower low pattern where we had that consolidation. Now we had a higher low and a higher high. Not a convincing break of that double top just yet, but the bulls have all the momentum here, and we're keeping our eye out for a bullish MACD cross on the daily. The weekly time frame shows a strong week as well, 2 weeks in a row with bulls buying that dip, maintaining support, and now we're looking for follow-through to the upside. And this could be construed as a bull flag as well, where you have the huge breakout on the weekly time frame on the OPEC news, and then you get your parallel channel of consolidation. And not going to see it with all those lines in there, but support, parallel, support and resistance, nice contained consolidation before moving forward and progressing to higher highs. And if you zoom out on the daily time frame, you can see it a bit more different, a bit more clearly. But we're looking for continuation, and we're looking for the bulls to remain in control. This was a really strong day to end the week, and I'm liking the MACD cross setting up. So we'll see if we get that follow through next week. And then we'll be looking up at 54 psychological resistance as the next level. So let's see how USO fared at the end of the week. And there is a gap up open, rejecting from the middle Bollinger Band resistance. And you can see every time we see a gap up open, or every time we've seen a gap up open in the past 2 weeks, these black candlesticks show the high of the open, the real body of the candlestick being the open, and then the close being down at the low. So it's a way of showing that the bears were in control that day. And obviously, the gap ups are not being held strong. So we need that middle Bollinger Band back as support, 1148. We have our base of support down here, 1107, 1108. And now we need to break the lower high by getting over 1163 and 1162. So a little double bottom and a little double top. That's the range to be watching here on USO. In the weekly time frame, you can see the bulls buying the dip nicely those previous 2 weeks, and we're looking for continuation. I'm looking for continuation, and we'll see if we get it. So bullish on oil next week. We'll check in every night as always. I appreciate you watching. See you soon.